Second. Hello everybody, welcome to TraderMerlin Show. It is your hump day. Happy Wednesday, everybody. Big shout out to, we got Alex with the Seattle Mariners out there today, huh? Congratulations on a good start to the season. Although you chase them out, got athletics out there. It's going to get tough with the A's. Today's going to be a range-bound breakout type of show. Of course, if you guys have been following, we've looked at most of the major market indexes, the NASDAQ, the Dow, and the S&P, not range-bound, just continuing to break out to higher highs and higher lows. The other one, though, the Russell 2000, fairly range-bound. So why not talk about a show dealing with one of the specialties of my guest, Miss Tillie Allison-Harris, which is trading range-bound markets. Tillie, how you doing today?
Great, Merlin. Glad to be here. Yeah. So the last 3 days, I think the S&P bounced off Friday's close, right about the 82 level, 41.82. And then we finally had a little, spike above that today during the announcement. Close to 4,200, but we didn't quite get a close above. So still right back down that range bound. I think we're closing inside that range.
Yeah, I mean, we did briefly breach an all-time high today, as you guys can see on the chart here. But, you know, what's noteworthy about this is we are seeing a compressed, kind of a narrow range day is what they call it, an NRD, which is a sign of indecision for the markets. And really, I think what was happening today in particular was waiting for Jerome Powell and also for Facebook and Apple to report earnings. And we'll check those out here in just a little bit because there were some monster moves in the after-hour session with those two stocks. So, range-bound versus breakout, Tillie, do you have a personal preference? I know you're always looking at different market setups, but is there a preference for you?
Well, I think that the range bound is more consistent and anticipating that breakout and kind of waiting for it really hard. So I have more consistency when it is inside of a range, and hoping and waiting for it to break out, is a kind of, the whole hopium. We don't want to smoke too much hopium. So when we have an official breakout, then we can anticipate, it to move another 50 points, use the daily range as some anticipated targets. But with it dropping back down inside that range, we're just back to this, ping pong, if you will, inside the range.
Now, you do a lot with the longer-term picture. I know that you're managing your own accounts, and in this big uptrend that we've been in, you talk about breakout trades, which are, for those that might not know what a breakout trade is, it's typically when something traverses sideways or has difficulty going past either an area of supply or resistance or support below it. You might get that point where all of a sudden it pops through it and it surges to a new trend, which is kind of what we saw with the S&P going back into late March. I had a breakout and has been running ever since. For your strategies, I mean, if you're a money manager here, how are you trading those breakouts versus the range bound? Do you focus more? Like, for example, I talked about the Russell's range bound. The S&P, while it's slightly range bound over the past couple days, it's still, on the big picture, moving to the upside. Do you focus on those more?
I think the time frame is very important to different account types. So for more active trading, most people managing portfolio have more than one account. So the time frame is very important because longer term active investing, we don't even notice the range, meaning that if we only check that particular account bi-weekly or once a month, all we see is a big green candle at the end of the month. And what could have happened there, though, intraday was many consolidation formations, which actually result in those rallies. So it's a completely different ball game. Mm-hmm. Short-term active income trading on low time frames, we might be looking for more entries and exits. In a range-bound environment, it's going to be pretty obvious. Whereas active investing, holding a position for, it's kind of funny. I say active investing 2 weeks is kind of long, if you will. For people who actively manage the portfolio to be in an option position for 2 weeks waiting for the market to move. And so a completely different ballgame.
When you started off, when I first met you many moons ago through the halls of Online Trading Academy, you were a YM Dow Futures trader. That was it. 10 tick Tillie, trying to get you 10 ticks and move on. From there, you moved into trading the S&P, the NASDAQ futures, Russell futures, so you rounded out the index futures, and then you started to blossom into just about every asset class. You just mentioned the last comment there talking about options. Do you have a preference with regards to asset class for a specific market? For example, I know that when we have something that's range bound like the Russell, and I'll show you guys a picture of that. We've been talking about this for the past couple days. You've got this pretty big range bound market in the Russell that's been going back to roughly February. While it does have some big swings, it presents opportunities within that range. Now, most people would look at that and say, I'm jumping to the options side of things and trying to do some spread trades on there and maybe collect some premium or maybe sell some puts and calls. Do you have a preference for, let's start with range bound. Do you have a preference asset class for range bound markets?
For shorter term active trading, the futures market, smaller moves are more likely to hit some numbers, if you will. The futures market is and was developed for hedging and short-term strategies. So, many moons ago, big companies out there that are long the market and long companies, when we're having a correction or even a crash, these big companies out there have to have a way to make money in a bear market. So the futures market was originally designed for making money in a bear market. And it comes from the old commodities market, so if a farmer has to hedge their crop, what does that really mean? It means that their dollar cost of their investment is going to decline because of any reason. It could be seasonality, could be pests, could be just inventory, competition, whatever. But, imagine a farmer going to the bank and talking about how they need to hedge their crop. Well, on the back end, what's really happening is that there's a company out there that's actually shorting that particular crop. And they're using futures contracts based on, the value of that. So, to make it more simple to understand that there are certain products that were developed in the industry specifically for short-term active trading, like intraday, that have tight spreads. A spread is where we get our bid or our ask, where we're going to buy and sell. And if Merlin, if I want to sell something to you and you're not willing to give me the price I want, you're gonna take what you can get, and that can be a wide spread or a big loss. So the futures market in Chicago was developed by companies, professional investment companies, to actively short-term trade with transparency.
It's funny, you're like, you take what you can get. Now, I'm not that type of person. If I can't get the price I want, I'll hold off. I'm not going to buy it. I'll wait till I get the price that I want. I'm waiting. But that's just the difference in trade styles.
But like in a stock, if you try that, you might be waiting till the company goes belly up.
True.
So the only way to get the quote price we want is to trade a market that has enough liquidity with a very high probability of it trading at that particular price. And so the only time we're going to be able to get that kind of transparency is in a market that's traded that way heavily by, hedgers and commercials. There's a whole lot more players in the futures market than in any one individual company.
Right.
And, I think realizing that the companies are, quote, a long-term investing product, and sure, they're fun to day trade. I have a great time. We have classes here at Online Trading Academy, and I have a ball day trading stocks. It's fun. But when we run the numbers, you get a 10-point move on the S&P compared to a $10 move on a stock, and the rate of return and the risk exposure is going to be significant difference. So I would say that, trading for sport, stock trading for sport is fun. And if we're in those positions long enough, long term, it can be a great return on our portfolio. But for more active trading, products like futures were developed for that reason.
On a day like today, or actually this whole week, I did a show, I think yesterday, on the FANG stocks, because we have so many reporting this week. You've got Facebook, you have Tesla, you have Apple, you have Google, you have Microsoft, all reporting this week. As someone who's predominantly futures, which is what I think you're saying there, do you find yourself trading some of these? Because, after hours today, Apple, Facebook, huge moves to the upside. I know that for your risk tolerance, it's probably too risky to dive into those earnings plays, but do you ever kind of have a little break from discipline or let the hair down and say, I'm going to go trade some of these crazy stocks?
No, but those stocks are in my portfolio. So
Okay.
Their performance will directly impact, the rate of return the quarter. So, I may not day trade those stocks, but I'm holding all of those stocks long term. I've got a number of long-term investment accounts that are holding positions directly in stocks themselves, and then groups of exchange traded funds. And I even have, those mutual funds because it's part of a profit sharing plan. And I don't really have any choice. That's all they offer. So, stocks directly impact everything. And, I may not day trade them, but I monitor them, and they're what actually moves the futures market. So in order to trade the S&P 500, we have to understand what causes the market to make higher highs or lower lows, and it's the stocks leading that will create the index to get stronger. So monitoring those stocks can be a great odds enhancer for trading the futures market.
Yes, they can. The old proverbial odds enhancers out there. All right, so is there anything hot on your radar right now that you're checking out that you think is of interest, maybe as a potential breakout or range-bound trade setup?
I put an alert on the S&P 500 close to 4,200, which is just a few ticks above today's high. Looking for a close above that, and then a few higher highs and higher lows for continuation of the S&P. But I'd love to look at individual companies in the S&P to see if they are breaking out. Taking a look at the leaders of the S&P, and that'll tell us all why it hasn't broken out yet.
Okay. I actually had one set up here. I'm trying to figure out where the heck it went. Gosh. But it drives me nuts when I do this. I had a chart all set up here. It was an awesome looking chart, and unfortunately now all of a sudden I can't find the damn thing. Here's an example of what we're talking about today, guys. And it was Apple, and we had this one mapped out with this little yellow box. And this is one of those ones where it was on an aggressive uptrend from late March into mid-April. And then really for the past 2 weeks, you've seen it just traverse sideways. That's that yellow box you see there. Now, as I was kind of explaining on yesterday's show, I'm a big fan of breakout trades. The challenge we're going to see here with Apple is the breakout's already done, right? Normally what we would be looking for is, you see that little yellow box and the ranges there, saying, okay, it's trading inside of this range. I'm going to kind of stay on the sidelines unless that range is wide enough. In this case, you're looking about a $4 range. Certainly there's plenty of opportunity in there, but maybe it's a little bit more risk averse to wait for it to make a move. That said, when it gets above 135.40 or below 131, call it 131, those would be breakout trades, and we wait for those to happen. Now, if you've looked at the 5-minute chart of Apple here today, which I will show you that one, you can see that right now it is currently trading at 137, and it was trading all the way up to a high of roughly, I can't even see it so far off the screen, but I'll see if I can get that number for you, 139.51. Now, if I go back to that daily and show you where it's at right now, you can see that this thing is way outside those bands, right? It's not the 43, but those two price points, the 137.42 is actually dead on one of the high points we saw going back into February. And, these are, technically it's a breakout trade because it's outside of the range, but for the challenge I have on this type of breakout is it's an after hours breakout. And for me, that does not work for my trading style. It may work for some of you as you guys are looking at it, maybe gapping up into an area of supply or an area of demand, depending on which way it gaps. But I wanted to show you one that I've been watching as a potential breakout trade. Of course, you guys know I can't trade Apple because of the damage that Apple has done to my psychology over the years.
Right? Yeah. One bad apple can ruin the whole bunch.
It ruined my bunch, I'll tell you that.
Yeah. So another thing that's cool about the breakout range-bound trading, like if Apple closes above on a daily time frame 136, I would say, above there, and then we get some strength coming in intraday, that would tee it up to go further. If it closes below, you have a line there below that channel, closer to 130. As it declines, people are going to be looking to buy back in. So as the price, if it does drop below that rectangle you have drawn there, I think it's like 131, anywhere below 130, longer term investors are going to be looking, hey, do I want to buy at 125? Do I want to buy at 120? So usually with this kind of formation, there's not too much, quote, shorting aggressively. Mm-hmm. A lot of investors looking to maybe, buy in if it does correct. And if it does break the channel, that increases volatility. And for a lot of option traders, that higher volatility means higher option premiums. And there's going to be a whole world of investors using options to trade Apple at that time. So I think, if we get a breakout to the upside, longer term investors are going to be looking to go long. They'll buy into that. And then if it, breaks to the downside, option traders are going to be, positioning for it to go lower and then to buy into it as well. So it's kind of a buyer's market any way you look at it. You just want to buy high or you want to buy low.
Mm-hmm. Yeah, I mean, at this point now, you're not really looking for that sell side unless you're, anticipating it coming into overhead supply, which when you look at these indexes, they're at all-time highs, everything except the Russell. I'll show you one more that we talked about breakout trades or range-bound, and that visual we saw there on Apple is a good representation of something that's range-bound. Of course, we could look at different time frames, guys, and find things that are range-bound on an hourly time frame, a weekly, a monthly. That was a daily, and that's where I like to start looking for these things. That's just my personal preference. Certainly others will have different ways to look at it. But here's another one I wanted to show you. This is Autodesk, ADSK on a daily time frame. Now, this is just one. I've traded Autodesk a million times over the years, and it's been one that I have not traded much recently, but all of a sudden it starts to at least becomes somewhat appealing. And I wanted to kind of map out the strategy here, at least the thought process that I'm going through with regards to a breakout trade. Now, the main thing that I notice here with Autodesk is you've got this series of higher lows, right? And it's not a long series, but really since mid-March, it's been making higher lows and higher highs. Now, at this point right now, right around 300, we are smacking our head up against a level that may be a challenge, right? It's that overhead supply area on Autodesk, which is preventing it from going higher. So for a breakout trade, a couple different things. Number one is I'm going to use that 300 mark just because I like the whole number psychology. And if I do see breaks above 300 or a close above 300, depending on the time frame, then I'll be looking for a breakout, which will take it up to the next levels, which could be 310. You can see 320 is also a potential line. The challenge I think is going to come, and the question which will arise from you guys is, well, what about this tail right here? Why don't we use that 303.69, which is the tail that happened on, give me the date, Merlin, on the 15th of April. And it's a very good question. And this is where we have to figure out what our specific trading styles are and how we want to modify them to fit our needs. I like the 300 round number, so I'd be doing it at that point. It's a higher risk trade, right? Because there is a supply level right in front of it, at least the tip of that tail there. So some breakout traders would say I'd have to wait for it to get above 303.69. But anyway, just wanted to show you something that's current and could potentially be a trade setup here going forward. There are certainly hundreds of trade setups like this that we could potentially look at.
Yeah, so I think Brandon Wendell's in the house, and I was reading some questions about breakouts and head fakes. Yes, there's a ton of traps during breakouts,
Yep.
as we saw today. So, leading up to the Fed announcement, you get solid sideways trading, and that's a totally different animal. And then you get this head fake, false breakout, spikes above there. That's very, very common. And so, there's a lot of traps in there. So, waiting for an established breakout, closes, daily closes, hourly closes, whatever time frame is right for the investor trader. To have enough valid evidence of a real breakout, because head fakes, decoys, I always call it retail traps, are happening all day long on every time frame as price attempts to trade higher or lower, and not falling into that trap. I got caught today trying to position in the S&P, and I chose the Globex low, and it traded down to the previous day's low. So a girl's got to get out and get back in. And that's just, that's what happens. You get inside ranges and then a little bit outside range, and, rallied up quite significantly, but not, I would love to have seen it go to 4,200, but you just, like that head fake above that. So, yeah, just commenting on Brandon's questions here.
Yeah, I'll read it out for everybody since he typed it in there. It sounds like a typical one. Like, can you give me guarantees on how much money this pattern is going to make? Come on, Brandon, you know better than that. He says, do you use specific breakout strategies, and how successful are they? How do you discern between legitimate breakouts and head fakes? For me, it's pretty challenging. One of the things I like to look for, and I did a show specifically on this one, so if you guys want to, you can go to the TraderMerlin YouTube page. It's all one word, and you just type in volume. There is one that I talked about using volume for breakout trades, and specifically for me, if you have something that breaks out like that Autodesk chart, let's just assume that price broke above that 300 mark, right? If it breaks above it, great. That's an indication that optimism is there, that prices may move higher. But as we all know, there is absolutely no guarantee of anything. So one of the things that helps me a little bit, at least validate that there's an interest in higher prices, would be volume on the breakout. Reason for that is this. If we're trying to get above that 300 mark on this Autodesk, there is going to be sellers there. Whether it's institutional or retail, people are going to sit there and be selling shares at that point. If it gets through a lot of them, that tells me that there was an interest on a lot of people's parts to sell at that point. Then once it breaks above it, those people all of a sudden get buyer or seller's remorse and like, oh shit, I'm going to try to buy this thing now. And all of a sudden they jump on it for the next move up, and that creates an increased surge in volume. So I really like to see breakouts with higher volume. But, from Brendan's point, I don't know if it's a legitimate breakout or a head fake. A head fake, guys, is one where it just tiptoes across the line, gets you in, and it comes ripping right back down or back up, depending which way that trade went. And I don't have anything that guarantees any of that. For me, it's really about the structure and how that level is forming. You get a sense as to where the institutions and buyers and sellers are. But volume helps me mitigate some of that risk. If I see a breakout with very low volume, I'm just going, no way, because those sellers just basically backed away from selling as it moved to the upside. They're going to come right back in and push it down. Maybe I'll wait for the retest on it. So I need breakouts with higher volume to help me. There you go.
I need breakouts with some movement to offset a bunch of losses. So, questions about statistics. Every strategy has its own statistics. And I think the options market is one that is more efficient in quoting any statistical outcome. Because just the parameters are more defined. Options trading is more rule-based. And so therefore we look at, statistics, we have to compare apples with apples, no pun intended. So the rules for one particular market have to only be compared to the same exact rules for that particular market, and they can vary per market. So when you talk about statistics, I personally believe what I've discovered over the years is that it must be customized and optimized for each individual strategy in each individual market. And I've only been able to really run those stats on, specifically some option trades because I have all that data. And then as far as, short-term intraday trading, my rule of thumb is, hey, it's a 50% win or lose, okay? And the only thing that's going to keep us in the game is having enough income over time to offset losses. And the only way to get that is to have trades that have enough profit that run long enough to offset all those bleeders. And the bleeders have to be small. So, we all know small losers, little tiny ones. And learning to accept that is the harsh reality of trading, and being wrong quite a bit in order to position into a trade and be long the market, if you will, long enough to offset all the scratches if the strategy is designed to position long.
I think with all of these, I think the most important part of it all is, and it's great that I love the conversation that was started there. If you are wrong, then you just have to kind of admit it and move on. And so if I'm trading a breakout, and the question came through here, where was it? Patrick says, the breakout with high volume is a good sign. Yes, for me it is, because it shows me there's emotion as it breaks through something, right? And I want to see that emotion. So I'm a fan of having that high volume on the breakout. However, even if I have the perfect setup, it could be let's say it's on a 3-year uptrend. It's got an ascending triangle, which I can show you here if you guys want, and it breaks out on high volume. That to me is one of those oh yes, this is a great setup. It can still fail, right? So the whole point of it, even if we have the most perfect setup in the world, is I have to know where that point is where I get out. And as Jerry says, as Merlin, where would your stop loss be once it breaks over 300? Well, on this Autodesk here, I'm not sure yet. I want to wait for it to see what it does and how it, because it could traverse sideways, come back down to this trend line, and bounce back up. Normally, it's going to be below the most recent low. So that would be right around this 294 mark. So is a $6 stop too big? Yep, might be for some people. Well, we accommodate for that with share size. So if you're not confident that the breakout's going to be there, or if it's not a real solid breakout in your opinion, then just wait for the retest. The worst thing that happens is it keeps going up and the retest never comes, and you're like, damn it, I wish I would have taken that trade. Well, so what? Shut up and move on to the next one. Don't dwell on it. It's one of many millions of trades that can happen every single day. So just have your stop loss in place to make sure you don't get burned. Done.
Yes, stops are critical, just lifeline in this business. And I think rule of thumb is the longer term the position is, the less frequency there is. The statistics on that kind of trading is much different. Really active, high frequency, day trading, we all know requires a tremendous amount of risk management and also emotional discipline. And so that trying to get stats on one individual's returns is going to be very, very specific to that particular person. Mm-hmm. Yeah, so these guys just saw ghosts behind me. There's actually we have a class here this week. They're doing Forex trading.
Nice.
And so I've always run from the spot Forex market because I always felt like, well, hey, if you're trading bank to bank, you don't have any transparency. You don't really know what your spread is. That there's so much more to learn about that. We don't get the efficiency, but anyone who trades spot Forex, they know all that stuff. Mm-hmm. They know what their spread's going to be. So those people love that because it's more scalable. But I never really felt comfortable, trading spot Forex. And with the futures contracts, we get a little bit more transparency.
Well, you get that centralized exchange as well. There's a lot of documentation out there that some Forex brokers aren't acting on the up and up, and it's a question that comes up a lot is if you're trading spot Forex, who are you trading against? Most cases, you're trading against your liquidity provider, which means whoever you have your account with, they're taking the opposite side of your trade. A little bit more centralized, or at least totally centralized with regards to the futures market and currency futures out there. What I like about that, though, Tillie, is it's bottom line is it's what works for you. I know other people. You can talk David Warner, Tim Pessett. These guys. That's where they make their bread and butter. I mean, that their lives are trading spot Forex. And they would say, I don't care if it's like someone's trading against me. I'm doing my trades my way, and I'm successful at it. So we all have to find what works best for us, whether that's a breakout trade, a continuation trade, a range-bound market. The challenge for many people is filtering through all of the information to find out what works for you. Just on that vein, tell our listeners a little bit about I was teasing them earlier, I put 10 tick on your name on the screen just for fun. But walk us through your evolution, because I think it is telling on what worked for you, because you tried a bunch of different stuff. You tried a bunch of different avenues. So give us a little brief a brief walkthrough of your style and how you ended up where you're at.
Well, I got drugged to Online Trading Academy because a friend of mine knew that I like to push the button. And, I just figured you keep firing and eventually going to hit the target. And unfortunately, in this business, that over trading results in thousands and thousands and thousands of dollars of losses. And then, then go into different companies in the early 2000s before I came to Online Trading Academy and paid a whole bunch of money, to watch people up on a stage, mm-hmm. No hands-on training, and they talked about trading, and then you're supposed to go home and do it all by yourself. So I just developed a very high-frequency style, and it ended up resulting in a ton of commissions and losses. And whenever I came to Online Trading Academy, I'd been trading so long already that I had a ton of bad habits. And my worst bad habit ever was over trading. Mm-hmm. And so still today, each and every day, I have to remind myself that, there's only so many bullets in the gun. Okay. Mm-hmm. And all those bullets are costly. It's going to cost to open that trade. It's going to cost to use the capital for risk management. So I have to remind myself, I'm very much into health and wellness as well. And I wake up every day and go to bed every night, reminding myself the same thing, and I'm a foodie, guys. I have a 2-bite rule. And 2 bites, I can eat 2 bites of about anything, because if you let me, I'll eat the whole box of donuts, the whole half a gallon of ice cream. People look at me and they're like, oh my gosh, no way. Yeah, I will eat a whole pizza. I will, I promise. And it's because I love food. So I have a very appetite for risk. Mm-hmm. And also, many people in life, that's obvious. But, as far as that, so, I remind myself every day that, hey, it's going to take a few miles on the elliptical and, this and this and that and whatever to stay healthy. And I have to remind myself that every day when it comes to trading as well. There's as much discipline in both. Sure. Some people are lucky, and they can eat pizza and donuts and whatever, and they look great, but that's not me.
It's funny, the nickname that we call it internally is Online Eating Academy, because all the centers, most of the centers will cater lunch for the students. And by the way, I'm ecstatic that you guys are actually doing physical classes. It's so great to actually get back on track and hopefully have some physical classes at all the centers out there. I know some have struggled. Some of the centers have closed down because of COVID, which is really unfortunate, but hopefully things will get back on track here soon. Tell me, in your journey to where you're at today, starting from the 10-tick Tillie, who was eating a whole pizza and a dozen donuts, what are some of the things that you look at in the trading world and you go, man, I'm so glad I don't do that, or something that you tried and you said, I have to eliminate this from my repertoire because it's not me? Is there anything that's happened like that where you said, hey, I can't do this, or I'm not trading that because of whatever reasons?
Mainly the frequency, realizing that, only a few solid trades per day per market are realistic. Just realizing that, and I think observing other people's inability to accept that we have, some of us, most people, our behavior patterns can be very dangerous. That we drive our cars every day and we kind of get lucky, if you will, because other people are also following the rules.
Mm-hmm.
But in trading, there's a lot of people not following the rules, and they're hoping to get lucky, and they're just really, gambling, if you will, and the odds are stacked in their favor if they're long the market in certain products that will eventually get more expensive, because the system is designed so that stocks will appreciate over time in a low interest rate environment with the economy expanding. This is the way it's designed. So the odds are on their favor for longer term investing. But when it comes to short term trading, the odds are stacked completely against individual that whenever we see green, we want to buy. So I think the number one thing that really slapped me in the face, Merlin, and all you guys can relate to this, is, whoa, I realized, oh my God, whenever I see green, yes, I feel like I want to buy.
Mm-hmm.
And those feelings cause actions, and then that leads to behaviors that are extremely costly. The realization that emotions is who we are. That's what drives us.
Right.
That's why we're all here, because we all love talking about this stuff, because we know how alive trading brings to our being. It brings us, I see people come back to life when they learn how to trade. They've been in a business for 20, 30 years, they're very successful, but they've just been doing the same thing every day. And whenever they start to learn about the market and the trade, they start to learn about themselves. And it's that self-discovery of who we are that really helps us identify with what we can and cannot do, and why some people can take, 3 or 4 or more trades a day and have a clear head. But I'm more of a 2-trick pony. And if those 2 tricks don't set up, then we're going to wait and trade tomorrow,
right,
or the next day. And so I really had to, I guess, accept that I don't have the mental capacity or the patience and the discipline to take more than a few trades per week.
Mm-hmm. Nice. Well, I mean, it's a discovery process, and I, like you, suffered from that. My over trading at the beginning is the stuff of lore. I mean, you talk to most traders out there, and you tell them how many trades I was doing back in the late 90s, and they think I'm lying because it's just too many. But yeah, we have to start to refine down, find out what works best for us, eliminate the stuff that is bad and dangerous, and then you ultimately find out what works well for you. So, with regards to today's topic, which was range-bound trading and breakouts, I love them both. If I can find a wide enough range on a security, like we saw with Apple, you give me something that's got a good, let's say a 10% range. I mean, that is your proverbial goose that lays the golden egg. You buy at the bottom, you sell at the top. If you're not in equities, well, you could be using options and using puts and calls. I mean, there's so many different things that you could be doing in a range-bound market. In a breakout session, well, that's fine too, right? It's about looking for whatever that prevailing trend is, knowing that the odds are in your favor of going in the prevailing trend direction. And when we see those breakouts above specific levels, go for it and make the trades. But make sure that you have stop losses in place, just in case you're wrong, because you will be wrong, even in the most perfect setup in the world. Tillie, tell me a little bit about where you're going to be. You're in Kansas City because you got physical classes going. Are you teaching any physical classes here soon?
Yes, we have one starting May 1st, and they're really small classes, and people love them because we only have 5 or 6 people in a class, and everyone gets a lot of practice. And I have to wear gloves and a mask whenever I walk over to the station. But I mean, obviously, if imagine being in a class with 20 people versus 5 people. The energy level is more focused. People can focus. When you have a lot of people, it's like herding cats. And, there's obviously more questions and more distractions. So people have a more, I think, focused experience with smaller classes, and they love it very much. We've had a few people come back and retake. So one thing I love about the Academy is, and for those of you who don't know, I grew up practicing ballet. And I was in a ballet academy 6-7 days a week for 15 years, and that's just the environment that I love to be in. It's for me, it's home, if you will. And so the Academy from day one has been that for me. A place where we're all like-minded, we have the same similar goals, we're all coaching and helping each other. Yeah, so to have physical classes and to see people trading, for me, that just makes my day. And, Monday, Tuesday in the classroom, I help everyone. I do all the heavy lifting. But Wednesday, Thursday, Friday, I really get to see who's, a faster learner because they're trading. And then others that are still stuck, on step 3. So, we have classes here in center. Also, everyone loves the online environment too. I'm crazy about this on-demand stuff and live labs where I can see other people, students, working from home. It's amazing.
Well, we all have to adapt to whatever this crazy COVID life gives us, right?
Yeah. I think that there's going to be some, things that we discover that make us cherish, the in-person experience more, but then also realize how very beneficial online learning can be. I see all the great comments about Texas and Kansas City barbecue.
What about Nashville and Memphis? I mean, come on. We need to.
I bet. Oh, my goodness. Wow. And then I want to find out where Patrick's from because Patrick is making some great comments. He's like, most of us don't recognize, a behavior pattern until it's, quote, over. But the longer we realize that we are doing something and not getting the result that we want, we just, stop doing it. So that's what typically ends up happening is we realize that doing nothing is better than doing something that's going to get us into trouble.
Yeah, well, the sad part is most people don't know that they have a problem or are willing to acknowledge that it's a problem. It's somebody else's problem. It's the market. It's Goldman Sachs. It's Jamie Dimon. It's whatever the hell you want to point it at. And most of the time it actually is in our head and our problem. And hey, you know what? Just admit it and just move on. If you learn how to adapt to that situation, fix your problem, or whatever it is, whether it's trading or in your personal life, and just make things better for yourself. It'll be better in the long run. All right.
Yeah, what I love, active trading, we are 100% responsible for our own actions. A little bit more longer term active investing, the market itself really does do a great job in a low interest rate environment. I mean, anybody who's holding, long-term investments, we always talk about protecting those gains because, the bubble, the Fed says that, they're not concerned about these high prices. Well, if the chewing gum still has flavor, it's still chewing gum. It's still a bubble. The bubble still the chewing gum, you know what I'm saying? So just know that the market itself is amazing. It's designed to appreciate over time. And like all good things, that will eventually, come to an end.
Yep, absolutely. All right, Tillie, hey, thanks so much for coming on the program today. I know it's been a while, and sorry I got for those that didn't know, Tillie actually sent me her market outlook for the S&P 500, which I used to post on Sundays, but I was gone for the weekend and didn't even see it till last night, actually. So I just posted that this morning. You guys can find that at the TraderMerlin page as well. It's just an overview of kind of what's happening on the S&P from multiple time frames, outlining some accumulation distribution zones that she thinks is pretty good. All right, Tillie, thank you so much. I hope you have a great class out there. Again, thanks for coming on the program. And I'm glad you didn't have to wear masks and gloves to do the show, but I'm sure you'll be putting those on soon.
Yeah. Thanks, you guys. Great to see you all.
All right. Take care, Tillie. Bye-bye. Guys, that was Tillie Allison-Harris from Kansas City, where they are actually having a class today. I saw someone said Alex Perna. He might be the one teaching out there. I'm not sure who their instructor is, but great to have physical instructive classes back on scene again. I'm pretty happy about that. Shout out to Patrick. This is good. So he was talking to Brandon Wendell, who's in the room today, and he says, had a setup today on MGC. It failed, but it's all good. I knew my risk, and it was a small loss for you. That is 100% the way you got to be thinking out there. I can tell you, there's been so many trades I've taken that you got to shrug it off. It's like a Taylor Swift song. Shake it off and move on to the next trade. Nobody wants to lose. You lost. You had a predefined loss limit. No worries, brother. You did good. That's the attitude you have to have on that one. Why isn't it fidelity problem? Why I can't put stop losses on fractional shares? I'm not sure about that one, Alan. For fractional shares, you're part of a pool, and I don't know how the stop losses work on fractional shares, but that might be part of the issue, is you're part of a greater pool. But I don't know what the fidelity issue there is. Randall says, did they build out CliK to trade through Thinkorswim? No, they did not. It's not built for any specific broker-dealer. What CliK is designed to do is basically supposed to be an interface which they connect to your broker-dealer's API. So in theory, the long-run big picture would be Doesn't matter where you have an account. Let's say you've got an account at JP Morgan or Charles Schwab or Fidelity or E-Trade or Ameritrade or Thinkorswim, and you say, look, I have this platform, I want to plug into the API, and they say, okay, you can plug into our API, and all the data that is provided to that platform is provided by them, but the CliK platform is the interface and has a lot of proprietary pieces built into it that integrates your education into the platform. So that's pretty much it. All right. Yes, Jerry says Trader AA meetings. I feel like when we have Dr. Woody Johnson on the program, that's pretty much what it is. It's like this trader, hi, my name is Merlin. I'm a trader. Hi, Merlin. We've all been there. We've all gone through those lessons. And the more we can share our experiences, hopefully minimizes that learning curve for everybody out there. All right. Well, I will show you some stuff here today. I actually drew some chart patterns, which I don't know why. I was actually going to show you... you're asking about favorite patterns. Brandon was asking me what's my favorite ones. As far as breakouts go, these are three separate patterns. On the one on the left, there is an ascending triangle, which in theory, let me get my little drawing pen on the screen here. In theory, you want to see price moving up and forming this type of formation where it bounces like that and looks like this. That's a very bullish formation. And from a breakout perspective, I'm just simply waiting for that break above that line right there. I love this pattern equally as much as I love this one right here, which is a descending triangle, right? You can see the point. It's making the same lows but lower highs. Now, you could also be trading breakout patterns in a situation that looks like this, which I call oftentimes compression, where it's basically a wedge or a pennant formation. I don't like these ones as much, and here's the reason. The reason I don't like these as much for breakouts is because this trend line here is sloping down, and this one here is sloping up, so that number is constantly changing. If I look at the one on the left-hand side, the ascending triangle, this number here is fixed, right? So I know what this number is. It's, let's say, $30.75. Great, that's what that number is. But it's changing at every point along this line in a pennant formation or a wedge formation. So I don't like those as much. I'll still trade them, but I personally love ascending triangles, descending triangles. I like flag formations as well, just to give you an idea of some of the things I'm looking for. No, do I have any details of it? I don't. I actually just saw they went live the other day, and I have not traded them or even looked at what the details on it. I will. I'll get all that information for you. I looked at the volume of it, and it was just really, really ugly volume. Nobody was really touching that one yet. So I would say don't even mess with it yet. Give it a week or two to let some volume come into that thing and start to show some patterns and liquidity. But I'll get you all the specs on that tomorrow. I'll make the note right here, BTC Micro. Yeah, that's a pretty good one, because I think what that does, it opens up the door to a lot of retail traders trading those micros, which is great. I think that brings in more people. Do you think the last 27% decline in Bitcoin is significant swing low for Bitcoin? I do. Anytime you have, and actually, it's funny, depending on what platform you look at. We talked about this the other day. Let me see if I can bring it up on TradingView. TradingView actually has better technical analysis tools than TradeStation, believe it or not, for this specific one. But let me show you the sell-off that happened on Bitcoin. All right, this is the 15-minute, and we'll go to the daily on this one. I've still got it mapped out here. You guys can see there's that recent sell-off. So I'm showing 38% slide. I think anytime something falls 38%, that's a pretty significant drop. That is actually a fib retracement level if you're looking at the overall picture of things. So I think that is a definitely a good buy point. What's nice about what happened with the Bitcoin price chart is it came down into an area of demand, not the strongest. I actually would have wanted it to come down a little bit lower, like not much lower, but right to about 46,124. That would be the start of a demand zone for me. It didn't get down there, right? It sold off. It came to the bottom of this area of demand. But either way, yes, I do think it's still on an uptrend. You're still seeing higher highs, higher lows. It just broke this smaller downtrend. For example, let me draw it in here for you. If you look right here, it broke that blue line. Okay, well that's a shorter term downtrend. But if I look at the big grand picture here, it's still to me making higher highs and higher lows. So I'm okay with it. And yes, I do think it was a good buy point. But remember, I am definitely biased. I am definitely biased on this one. I believe that Bitcoins are going to be going much higher. Okay, let me walk you through some of the stuff that happened. For a trivia question today, I love when I get you guys interactive in chat. It always makes it fun. I'm going to read off 5 ticker symbols. And I want you guys to tell me which one you think had the biggest earnings surprise, the biggest blowout with regards to earnings today. You have Apple, right? You have Apple. I'll give you Facebook. You can look at Shopify, Qualcomm, and let's do Ford. Which one of those do you think had the biggest blowout on earnings surprise? Meaning they beat by such an astronomical amount. It's one of those ones you look at and go, how the hell did analysts not see this one? I got Apple, type it in the chat. Apple, Facebook, Qualcomm, Shopify, or Ford. Which one do you guys think? Tom? Only because you're in the industry. You know that industry. Nick says Shopify. Tom says Ford. The rest of you are probably left once the pretty Tillie Allison disappeared. I get it. You're stuck with my ugly mug. I need to shave. Is that what I'll get responses from people? Algebra says Ford. So I got 2 Fords and a Shopify. Here is the screen. I'll share with the guys over here. Apple beat earnings by 40%. Facebook by 39%. Qualcomm beat by 13%. Align Technologies by 25%. Shopify 157% beat on earnings. But look at Ford, 456% surprise. They were supposed to come out at 16 cents per share. They actually came out at 89 cents per share. Now, if you're like me, you've got to wonder, if you're an analyst, you're getting information from the company. They're telling you the number of vehicles sold, this, that, and the other things. How the hell can you be that far off on an earnings announcement? Obviously, a great earnings announcement for Ford. Here is the price chart of Ford, so I can show you guys what happened there. You would think that they'd be just through the moon. Let's go 5 minutes. Here is your 24 hours of Ford. There you go. And Ford is down. They beat by 456%. And they're down 3%. This is why I hate earnings. I absolutely hate earnings. Yes, Tom. This is what I wanted to get. I wanted to get a job as an analyst because what an analyst does is it allows you to celebrate mediocrity. Like, you can be a complete idiot. I mean, did they go into Animal House, right, and pull out all the graduates from that frat house and say, hey, you know what? You get to be an analyst for some company, for some stock, because we just don't have anybody else to get, I guess. I don't know. It's just shocking that you could have that much of a blowout earnings and then all of a sudden sell off like that. Just crazy stuff out there. Jerry's, yeah, Elon Musk has to do a merger and acquisition with Ford. I don't think he's going to waste his time, although it might help him build out very, very quickly. All right. I had to share that one with you. I thought that was kind of funny. So that was your earnings announcement for today. Let's go see other stuff that happened today. Here is your earnings announcement for tomorrow. Now, again, big names tomorrow, guys. After market close, you've got Amazon, you've got Twitter, and you've got Gilead Sciences. Really a bunch of drug stocks tomorrow because you've got Gilead, Merck, and Bristol Myers reporting. MasterCard will be before the market opens, as well as Caterpillar and Altria, M-O. Oh, Altria. Changed their name. Yes, gotta love that one. And then for the next day, let's check out what's happening tomorrow from the economic calendar perspective. Lots going on, and I actually had to trim some of this. You have GDP coming out for the U.S. That's the advanced GDP. They're expecting it to jump from 4.3% to 6.8%. Obviously, things looking pretty good. That retail sales numbers was great as well, so that could help the GDP. You have pending home sales as well for the United States, and then really not a lot else for the U.S. You have unemployment rate for Japan. They also have some CPI numbers as well as industrial production and manufacturing. Australia has producer price index, and then we see some GDP numbers coming out for France. So a pretty busy day down for tomorrow on the economic front. That is it with regards to economic calendar. Coach says, do you think Amazon's going for splits? I think they will. I don't know when, but I'm pretty sure that they will, especially given what's been going on with Amazon lately, right? It really hasn't been the best looking charts, but I have been just floundering around. Here's the chart of Amazon. You know, everything else seems to be really ripping. Yes, Amazon's still trading at almost $3,500 per share, but look what's happened since July. It really hasn't gone anywhere. It's just been traversing sideways. So Another way they can juice it is to say they're going to do a split, and that'll get the prices to spike up there. And remember, when they do a split, it'll probably be like a 10-to-1. So let's say it closes at $3,500. That means that each new share would be worth $350. That makes it much more appealing for your little Robinhood traders that can't buy, a full share of Amazon. Maybe they can do fractional shares or something. But all of a sudden what happens, not only do you get the surge because of the split, you'll get the surge because all of a sudden people feel like, oh, $350, it's going to get back up to $3,500. No, it was at $3,500, and they did a split. Just, the way it works. Okay. So that is it for tomorrow. I have no guest for tomorrow, which is good because I got a bunch of different list of questions I want to get to. If you have anything specifically that you want me to cover, I'm happy to do so. We'll talk about those Bitcoin micro futures. We'll talk about a whole bunch of stuff. Yeah, Tom says do a 100-to-1 split. That would you could see a 100-to-1 split. I don't know if, I'm sure companies have done it in the past, but that would put it at $35 per share. Oh man, people are gonna be like, I can buy 1,000 shares of it now. Yeah. You don't get it. There's 100 times more float out there. The beauty. People are so attracted to price in the markets that, it just drives me nuts. Someone will think, oh, well, $35 is a much better price than $3,500. It is, but there's 100 times more shares out there when it's at $35. So you're just buying a small piece of a bigger pool. Get on the phone with Bezos, buddy. Yeah, Patrick, let's do GameStop tomorrow since I'm out of time here. I'll write it down, but I'll put it right on my notepad for tomorrow. If you guys have anything you want me to go over specifically for tomorrow, I did see some of the comments and chats come in and emails. Email me at TraderMerlin@gmail.com. Hopefully we can get those in today or tonight, which would be great because then I can actually build whatever information I need to get, and maybe I can get some of the questions you guys have sent in over the past week that I didn't get to. So hopefully we will get a chance to do that. All right, everybody, thanks so much for joining us. If you enjoyed Tillie Allison, you can find, she's really not that heavy on social media. She does some Facebook, a little bit of Instagram. I'm trying to get her to do a little bit more social media stuff. But you can always see her Tillie's Market Outlook at the TraderMerlin YouTube page. Just go to YouTube, type in TraderMerlin one word, and you'll see I have a channel or a playlist that says Tillie Allison's Chart of the Week or Market Analysis, something like that. I don't even know what I've got going on over there. All right, buddy, that's going to do it for me. Hope you all have a fantastic day. I will see you mañana. Take care.